Excellent. Well, I appreciate you having me back. I hope everybody's having a wonderful Saturday and a wonderful weekend. I am Stephen Cawiezell with thetradersplan.com. So I'm going to just dive right in and get started, and we'll show a little bit about me. I'll share a little bit about me, and then we'll get into the fun stuff. So just a little bit of background about myself. I've been in the market for about 20 years. I bought my first stock at the age of 14, and the rest was history. Now, I had a little bit of luck when I initially got in the market at the age of 14. It was in the 90s run, so I took it out at the age of 16 and put it down on my first car, and obviously I was hooked ever since then. So I live in the small working class town of Russellville, Arkansas. It's in central Arkansas, about an hour north of Little Rock. This is where I grew up. I've lived in other places, but it's funny how I find myself coming back here with my wife and 2 kids. I have a background in economics and finance, and I was a financial advisor and a money manager for one of the largest investment firms in the country for about 6 years. But I left that back in 2013 to focus on individual trading and my publishing company. So here I am before you today. Just so you know, I am a family man first. These are my wife and kids, Stephanie, Madeline, and Graham. They are 7 and 5. So obviously everything I do is for them, and you know, we trade for the things that we love and for family, and that's what's really important to me. So that's why I do this, so I can have the flexibility and freedom to spend more time with them. Maybe that you have the same aspirations. I hope you do, but let's move on to the disclosures. We have to make the lawyers happy. I'm going to let you read that just for a minute. Okay, now into the fun stuff. I typically like to get right into it. So in this presentation, I'm going to show you the exact rules on how to identify the weekly reversal strategy, and we're going to talk more about what that is. I'm going to show you a simple 3-step process that anyone can follow. Now, my big promise to you on that is there's no extra tools, there's no extra indicators, there's nothing extra that you need to buy. 90% of these you can just identify on any weekly chart with a good old-fashioned eye scan. So I'm going to walk you through those. I'm going to share the rules with you, so you might want to have a piece of paper and a pencil, but I'll warn you, they're so easy and profitable, you can just write them down on a sticky note. Number 3, how to use this simple strategy for retirement income. Most of my clients and subscribers, they do use this for retirement income because it is a simple strategy that anyone can follow. Its average trade lasts anywhere from 2 to 4 weeks, so about the end of the month when it's time to take some income. So I'm going to show you how to use that and how portfolio management skills for this one pattern. Now, this is one pattern. It's one simple pattern, not 2 or 3 combined. This is just one pattern. Now, and I'm going to show you the results my clients and I have been getting following these 3 simple rules. So you can, we're going to look at real life case studies. We're going to look at some trades that have gone really well, and we're going to look at some trades that haven't gone really well, because I think it's important as students of the market, we always want to analyze both, to always see every time I take a loss or even a win, I look at the trade and say, hey, is there anything I could have done a little bit better next time? So I'm always looking to improve. I want to start with some I believe statements. And this is going to preface the pattern that we're going to be going over. So I like growth stocks. I do. I have an emphasis on market trends and growth stocks. I like powerful stocks with powerful earnings. But I believe in focusing on price and volume first. So typically when I am scanning, when I'm going through my scans, I'm looking at the price action right here, and my eye immediately follows down here. And then I go over to look at fundamentals over here or the rest. So it's really easy for me to go through a list of 100 charts because my eye flow starts here. What's the most recent price action? What's the most recent volume? And then I move over here where I have some fundamentals listed. So I like to focus on price and volume. Now, quiet volume is just, to me, just as powerful as strong volume. So I want to use Stitch Fix as an example. This was a recent IPO. I believe they have a subscription model for clothes. They send you out a box. You pick what you like. It's kind of a disruptive industry. So, but it's really interesting. They IPO'd and they moved strong out of the IPO, and this was back of November 2017. Plenty of volume right there. Typically, my personality, I'm not going to get immediately involved in an IPO until I see that first consolidation. Because, and we're going to talk about this more, stocks have personality. So when a stock comes out, I want to find out what kind of personality it has to see if it matches my personality. Now, it made a nice move, and then it went into a consolidation. It pulled back, and this is a pretty good pullback from 30 to 18. But, you know, it's probably a 35% pullback, but it's also a powerful growth stock, so they typically make big moves both ways. But the interesting thing on the pullback, look at all this volume over here. Look at all this volume in here. It is incredibly, incredibly quiet when it is consolidating, and this is something that I always pay attention to. When I see a pop in a stock and then it starts to pull back, and there's really no distribution while it's basing, while it's consolidating, I'm going to set an alert for when the volume spikes for me to pay attention, because now all of a sudden the personality went from quiet and it woke up. So you have, you know, I'm sure you've heard it's quiet before the storm. I use that all the time with stocks, because stocks are typically incredibly quiet. They're trading sideways. They're trading tight before they make their big move. And then you had the earnings pop. Now this earnings pops cleared all the pivots right here, at least all the closing pivots, and continue to go higher. Look at this accumulation right here. This is not you or me or your grandma up the street. This is real institutions. This is real smart money and money flowing into this. Now, what I like to do is when I see this, I just like to ride their coattail, because being a small investor, you can follow the volume and the price action pretty easy and get in and out, where these guys have to take very, very large positions. The positions are not made in 1 week. They have to accumulate them over time. I guarantee you some of the people that initiated a position back here exchanged, and then the weak hands started to sell off, and then the big hands started to come back in and step up and support their position. You can tell a lot about a stock or what it's about to do just based on looking at the quietness, and then all of a sudden you have that pop, okay? So I believe in focusing on price and volume first. My second pillar, I believe in quality companies with quality fundamentals matter. So I match, and I'm going to show you how to do this in 3 simple rules, so don't get overwhelmed. I match the price and volume, and then the third thing I look at is the fundamentals, right? So what I look at is, you know, are the sales growing? Are the earnings growing? Does it have a high return on equity? And that's, you know, I was really raised on IBD, Investor Business Daily, so he focuses on sales, earnings, and return on equity. But I like to take it one step further. I like to print off charts and look at the biggest winners over the last year, biggest growth stocks with the biggest fundamentals. I think today, and I continue to tell the people that I educate, the single best tool that you can for making yourself a better chartist is to maybe print off, go through charts, or just print off 5 charts every weekend. Just print them off, take an ink pen, and just be observant. Mark it up, see what you find. You're going to find the same stuff over and over and over again. And by finding this same stuff, you're going to know how to react to it next time. But typically, this is a stock right here that I still own right now. I think I'm up 58, 59% since I bought it. But what I like to look for is year over year earnings accelerations. So if the earnings estimates, I don't really focus too much on quarterly, because you have so much seasonality in certain companies. So I like to look at the bigger picture. Now, if earnings are expected to be up this year, I like to see what it's doing next year. Is it expected to accelerate, which it is. So I look for year-over-year earnings acceleration and a high return on equity. how well is the company run? If I could go back, now this is just my research, if I could go back and look at all the growth stocks, I really have to attribute the ones that are what I call the steady phrase, like that line just keeps going up in a 45-degree angle, the stock does. The best steady Freddy type stocks, growth stocks, have a high return on equity. So I look for a return on equity as high as it can have, minimum of 10. But if I have a year-over-year earnings acceleration and a high return on equity, I'm good. So I just identify price and volume. My eye moves over. I look at earnings, and then I look at return on equity. I do look at sales just to make sure they're not negative, but earnings and return on equity are my two top fundamental, qualities I look at. So my third I believe moment. I believe in catching. I kind of did a mistype, but I believe in catching stock early in its move. And we're all different, right? This is just part of my personality. You have to find the kind of trade setups and trading that works for you. Studying so many growth stocks, I just feel personally more comfortable. I like to find quality growth stocks at quality prices early, what I think is early in a big move. And I'm going to go back to Stitch Fix because now this is a snapshot of back in July. This is up here since then, but I think that this pop could start the beginning of the move. Now, I'm not telling you to go out and buy this right now, but this would be the kind of candidate that I think that has the earnings, the volume, and I think it can be very early in its move because it's an IPO, okay? So I have those three I believe statements. I believe in price and volume. I believe in quality fundamentals, and I want to catch those quality growth stocks early in its move because what I have found by catching a quality growth stock early in its move, you are less likely to be shaken out whether instead of it's already doubled or tripled over the last 6 months. So how can I buy these quality names at swing low points? And when I identified this, it went back to several years back when I would buy a book every year of the best quality growth names and the biggest moves. And I take a pen and I just mark it up. Road trips, I take it with me. I just have my big pen and I mark it up. I try to see what I kept seeing over and over again. And these swing low points I kept finding. And I said, okay, these growth stocks are making big moves, but where can I get in where I feel if it's pulling back or in a downtrend, I can catch it at that swing low reversal point to get a quality price on a quality name. So after studying chart after chart, I kept coming across this same weekly reversal pattern. Same pattern over and over. You can find this pattern on any weekly chart. If you go back a couple years, we'll look at some examples. I guarantee you 90% of the charts that you look at, you're going to find this pattern once you train the eye a little bit. So, and it's the weekly reversal pattern, or at least that's what I call it. I don't know if I gave it that name or somebody else gave it that name, but it seems to fit. So it is a weekly pattern, a weekly close pattern where you are going to buy the following week. It's very simple to follow. Let's look at some examples and let's go over the rules. Okay, so this is Triple D. This is just a sample. I have a love-hate relationship with Triple D, and I don't want to get into that right now. So you have these, downtrends. This is a volatile stock. And then you have these swing lows, right? And then you have a pullback, and you have another swing low, another swing low, and another swing low. So when you see it, it is important to pay attention. If it follows the fundamentals that you like, or it's just a company you like, and you notice that it created this pattern, it might be worth consideration for you to, place a trade. But that's up to you. So I want to go over the rules. This is where you pull your pencil out or even your little sticky note because it's just that simple. Now, the rules. The weekly chart must undercut prior weeks. So that's the reversal aspect. So we're in a downtrend. It undercut the prior week, okay? Must close above the prior week's close. Simple enough. Must close above prior week. That is made sense. And then the third rule is above average volume. Must be in above average volume. Oh, someone's ringing in my doorbell, but they'll just have to wait. So you have three rules. Must undercut the prior week, must close above the prior week, and must be above average volume. Okay? Now, what do I define as above average? I typically just plot a 20-day EMA over the volume bars. And if it's above the bar, I consider that above average. Okay? So then, boom, you enter on Monday. This would have made a nice 64% run. Another pullback, you have that weekly undercut, closed above prior week's close, undercut it, and above average volume. Nice 118% move. Now, these are extreme examples. I'm going to show you a better profit-taking strategy because we know that not every trade is going to be this big. Now, let's look at one that didn't work. So you have all these downtrends, and then you have this nice reversal right here. It failed because, and it failed. See, it tried to go up. It did not hit any kind of price target, and then it rolled back over. It failed because the average was below average volume. So this isn't a trade I would have took, and rightly so, and it ended up failing. You want the volume to step in. You want, when that stock reverses, you want to make sure that big players are coming in and supporting the stock. Okay? Then, I mean, if you bought anywhere up here, you're not sitting well. Then it came all the way down here, and it undercut. I know it's kind of hard to see because the volume bars are over here. It made a undercut, and it continues to go higher. So it undercut the previous week in above average volume. All right, and now you're buying the next week. Hit a really, really nice move straight up. Again, they're not all going to happen. We're going to look at some ones that it didn't happen like that. This is a powerful, powerful growth stock. But isn't it interesting that the stock went from $97 to $6, and right at the bottom, right at the turn, it printed that reversal. So you might have been watching, Triple D or other manufacturing type of companies in a similar sector that might have reversed all at the same time. So let's just keep moving on. Let's go to another example. I want to recap the rules. This can be, actually, I wonder if I could go back. I want to recap the rules just to make it simple. Write this down, and we're going to go through some more charts so it's easy for you. The weekly chart must undercut the prior week. Simple enough. Close above the prior week's close. It's also an easy rule, and you can identify these with your eye. And the volume must be above average volume on the reversal week. Above average. It does not have to be above the prior week's volume. It just has to be above average. So you can have the previous week had a big, big volume day, and then you had another big volume, but it wasn't quite higher than the previous week, but it was above average, okay? Simple rules to follow. We're going to talk about some profit strategies. Let's look at some more charts. Winnebago. This is an ugly chart to say the least, and that's why I'm going to show you, the profit-taking strategy, and not expecting every trade to go into the stratosphere is not a bad idea. So right here, you find a swing. You can just kind of scan this whole chart and look for swing low points, and you can, take 5 seconds to look at a chart, see if you can find any, and you will if you go back 2 or 3 years. So you have a weekly reversal, undercut the prior week, closed above the prior week, above average volume. Now you can see this above average volume was not higher than the previous week, but it still was above average. Enter. That was a 69% move. Then it gets into a nasty bear market. You're looking at these swing low points. This swing low, looking at it, I don't see, here was a swing low too right here. There was a 10% gain. Couldn't find really one right here. This might have been one. I don't know if that hit 10% right there, but you could have played this on the way down. And then you had a nice weekly reversal right here, undercut the previous week, close and above the previous week, nice 25% gain. Come back down. This is why you want to proactively take profits. Unless you really, really like the stock and you just find it at that price and you're like, you know what, I want to hold it forever unless I get stopped out. Another 25% gain. Look at this candle right here. Man, that's a big candle above average volume, but that after that downtrend, it made a monster move. Then another pullback. Look at that candle. Look at that volume. Undercut, closed above the prior week, volume is there, made another monster move. Okay? Now I want to start going into some of the trades that we actually took. So this is BEAT, B-E-A-T, and guys, I promise I'm seeing some questions come in. I promise that I will cover these questions kind of towards the end. I just really want to go through this a little bit so everybody can see it. So you have BEAT. This is one we actually played. Now we're going to get into the profit rules, okay? Nasty downtrend, all of a sudden it reversed, above average volume. We typically are taking gains at 10%. We're going to immediately buy at the open on Monday. So this is a week close pattern. So what happens, I spend 5 to 10 minutes every weekend going through my scans. I find 2 to 3 that I like, and then we buy them on Monday. Might be 1, might be 0, might be 5. It just depends on how many I can find. So you buy at the open price on Monday, and then your price target is 10% above that. Now, we have a stop loss in place because some of them don't work out, as we've looked at Triple D. We're going to put a price stop 1% under this week's candle. So you have a stop of 23. It was 07. So if you just 23 cents minus 23.30, 23.07 is your stop. And then whatever this is, a 10% price target. And we're going to talk about how to mechanically put a bracket in place. And it's a little known trick that I think most everybody should use is placing a bracket, because the best thing I believe for traders is to make trading mechanical as possible. One, that keeps you from having to stare at the screen all day or be worried about it. It just takes the emotions out of trading. And that's the goal, to make it easier for us, make it easier for our psychology. You place the trade on Monday. You place your bracket. So you place 10% gain, you're going to sell out automatically, or you're going to get stopped out. So really anything that happens in between, you don't really have to put too much focus into, because you have your price targets and you have your stop loss. Make it mechanical. This is another one we took, CTSH, right here. I want to add something that I've seen over and over again. If you have these, I use the 10 and the 40-week EMA, okay, for the moving averages. This was a weekly reversal, clear as day. Undercut that, closed above average volume. All the rules were there, okay? Bought on open on Monday, it took off. We hit our 10%, no problem. I have found a higher success rate when these stocks come down to the long-term moving average, or even the shorter term, the 10-week, and reverse, because a lot of times, look at this, this was a weekly reversal. You can see with the volume, this didn't quite cut the volume mustard. Then you got another one right here. Then you got another one right here, above average volume, and it hit its 10%. So my point is, a lot of times institution will come in, they will support their stocks at these moving averages, to keep them from going under a long-term downtrend. So they'll come down, and you can see by the end of the week they're back up, because the institutions are coming in, they're buying shares. They don't want them to go into a serious downtrend. So it's a good place for a lot of institutions to hop on board, which is good for us because we're just going to ride their coattails. Now, they don't all work out, as you know. One of my favorite phrases out of Eddie Sakota, one of the traders and market wizards, he says, if you don't like whipsaws, then don't trade. Whipsaws are a part of trading. You can have everything set up right. You look back at the trade, you would have done the same trade over, and it just didn't work out. This is one that didn't work out. You had a weekly pattern that failed, and you have this was ES, Eversource Energy. You have see, it came down, it undercut previous week, made a monster move, and then it just sold off. It undercut, never hit that 10% gain, even though the volume was huge. Now, I had a lot of conviction in this trade because look at that volume. That is someone big stepping into it.
So far this year, but it is worth the most at 50.
Look, I think I can hear somebody. I
got it for you, Stephen. John Thomas signed in early, and his mic was open. I closed it out for you.
Okay.
Okay.
Thank you. Okay. So everything looked right, and it didn't work out. That is a part of trading. It failed. We took our stop, and we moved on. And this is exactly why we have our stops. We could have got out right here at 58, which we did. It went down all the way to 52. It actually went down 52 down here. But look right here, and this is something that I totally missed. Had another weekly reversal pattern right down here at the bottom, and then it took off, and it definitely hit its 10% price target. So sometimes I will play the same trades, especially if they have a history of working. This one I did not. I just totally missed it. But it is a great example. Now, creating a bracket. I really hope you take this away and implement this into your trading, no matter what style of trader you are. Here is why. A bracket, any broker will let you set up a bracket. I use Schwab. If you don't know how to set up a bracket, just call your broker and ask them to walk you through it. This is just an example. We have RRGB, which is Red Robin. We went long, and what we did was all the shares, we are going to set a bracket. We want it to sell us automatically once we hit a 10% price target, and we want to put in our stop loss at a certain price. So I preview order, and now what's going to happen is I don't really care what happens to this stock in between these two prices. I'm going to watch it, but when I get an email is when I know one of them is going to be hit. So it takes the emotions out of trading. You don't have to watch it on a daily basis because you have your bracket in place. Take the emotions out of trading, make it mechanical as possible. If you get anything from this outside of the pattern, I highly recommend implementing brackets on some of your trades. If you have problems with your enter and exit strategies, you can predefine it before every trade and place a bracket. Very easy. Here's another one. We did take COG, Cabot Oil. You can see is in a prior downtrend. Came down to the long-term moving average, reverse, undercut clearly, closed above clearly the previous week, and above average volume, cluster of volume. That gave me a little bit of confidence, and then boom, it takes off. We booked 10% profits up here right before it pulled off. You can play with, if you want to, if you think something's going to be a bigger winner, obviously you can hold out for more. I think it would at least be wise to take some profits off the table at 10% because you don't know what's going to happen, and that way it's a psychological thing. You're getting in the habits of taking some money off the table, and if you think you can sell half, and if you think it's going to be a big winner, you can let the rest ride until it makes you a lot of money or proves you wrong. But either way, I'm a fan of taking some off the table, raising your stop to break even, selling half, raising your stop to break even. That way, if it runs great, you're still going to make a lot of money. If it doesn't work out according to plan and stops you out of break even, you still netted 5% on the trade. So because you sold half at 10, you broke even on the second half, netting you 5. So I want to walk through the narrow down on the fundamental rules. So you can write this down as well. This is what I look at. And I'm not saying every time I can find one that matches this criteria, but when I have a list of 3 or 4, I'm always going to narrow down that I would buy them all. I'm always going to narrow it down by the one with the best fundamentals. So I look for accelerated year-over-year earnings per share growth. Now these are estimates, okay? For example, if 2018, I have stock XYZ is estimated to have 10% earnings per share growth, and versus an estimated 20% 2019 growth, well, that's an acceleration year over year. I like the acceleration because the market is always forward thinking. That is why the market always bottoms before a recession is over. I don't know if you ever noticed, the market always bottoms before a recession is fully over because the market is forward thinking. I do like a return on equity of greater than 10. 90% of them, I like to higher than that. That's kind of my minimum. So these are the fundamentals. When I have a list that I like, I tend to narrow it down. So just to show you another example, walk you back through this, you have 2018 estimated earnings per share is supposed to be 35, 36 next year. So that's an acceleration. High return on equity. Sales are there, so I got 1, 2, 3. I'm good. This is going on my short list. Avoid the faulty patterns. Now, I just want to show you one thing that I would recommend avoiding because there is a faulty pattern, but it's very simple to understand. When the candle is too long, so we are risking, we're going for 10% on the upside. If the candle is 20% to the downside, and then you got add an extra 1%, you don't want to risk 20% to make 10, okay? So when a candle is too long, unless I really like it, which I did on this one, I'm going to completely avoid it. Now, what I improvised on this one because all this bullish action, I thought that it was about to take off, especially look at that sucker. So what I did was I just turned it into a swing trade. I just said, okay, I'm going to go with the 10% rule, which it hit. We immediately got 10% in like a week and a half. But if it closes before the 10-week moving average, before I hit that 10%, I'm just going to get out. So I raised my stop a little bit, which you can do on the longer wicks. Most of the longer wicks, I do stay away from. So this is just a suggestion. Everybody's a little bit different depending on how much you have. But I think a simple way to look at it is, I don't believe in, over diversifying because typically over diversification in a falling market, they're all going to take you down. So correlation matters more for diversification than actual owning more stocks. So, I like to focus on a smaller number of positions that I know. This is just a suggestion, create a $10,000 account and evenly divide each between 4 or 5 stocks. Again, you have to be comfortable. You have to sleep at night. So this is kind of more yours, but this might be a suggestion. So for the last 3 years, I've enjoyed identifying opportunities in the market and helping my subscribers earn additional retirement income. So how have we done this year? How have we done in the last 12 months? In the last 12 months, we've had 79 signals. So that's definitely about 1.5 signals per week. And our win ratio has been 72%. Now, these are just headlines of subject lines I sent out to my subscribers. I don't know if I've ever had a more fun day when we owned Mobileye and it got bought out by Intel. So we sold that for a nice 43% gain. Obviously, they don't all work out like that, but it has been consistent over pullbacks and uptrends. So if we break that performance down even more, and we're going to look at some past trades here in a second. I'm going to give you access to these trades. So, I hope you're like me and a student in the market and you just want to study them. You want to look at what's worked, what's not worked, and how can I improve. So the last 79 trades, 57 have been winners or 72.15% win ratio. On average, about 1 to 2 trades a week. Now I say on average, some might be 0, some might be 4. It just depends. Back after the market sold off at the end of January and early February when the market reversed, I loaded up with about 6 or 7, and they were all winners just because the market was reversing at the same time. We were buying quality names that were all reversing at the same time. Average trade can be anywhere from 2 to 4 weeks, and the average win is 10%, and because that's our price target, and the average loss is 8.17. So you're winning 72% of the time, and this is just based on these signals over the last 12 months. The average win has been 10%, the average loss has been 8. So you're winning more than you're losing, and you're gaining on each trade more than you're losing. So I think we've done pretty well. And to break that even more, the average trade net gain per trade is 4.29%, and this is every trade included. Now let me explain this number. That means out of the last 79 trades, you would have averaged on every trade a 4.29% gain. So I took the net gain of the last 79 trades, the total gain percentages minus the total loss percentages, and it netted 330%. And then I divided that by the 79 trades to get the average trade of 4.29% gain per trade. So don't confuse that with the average win is 10%. This is the average trade, and I'm sure you can imagine if you do 79 trades and every single trade is a 4.29% on average, and you compound that, we have done pretty well. This is a really good number if you're averaging that. So if you are closing 3, 4, or 5 of these a month and the average is 4.29, I think you're going to have some nice extra income, whether retirement income or making a car payment, or whatever it is you see fit. Maybe you're like me and I'm a younger guy, so I like to compound the interest a little bit. So want some help. Before I get into that, I want to walk you through my actual members area, and I want to walk you through the chart just to show you. Now this is inside the members area. I track all past weekly reversal picks so you can see every single one of them because I like transparency, full transparency. So this goes back to a year, almost exactly a year is when I've been trading them for longer, but this is really when I started making this as a part of my service. I've seen what happens over and over. You go on massive runs, okay? Now these are the stocks, symbols, the date we purchased, and the gain or loss. You go on some massive runs, right? This was like 10 or 12 in a row, and then you have a cluster of losses. And then you go on massive runs, and then you have a loss, massive runs, cluster of losses, massive cluster of losses, and so on. So in this, you can also, I'm going back to add more charts. What I want you to do, hopefully, again, if you're like me and you want to study this pattern, click on a chart and study my markup, because I have a marked up chart, so you can go back and see. You can just click on the name and you can see weekly reversal pattern completes right above long-term moving average. So above average volume, we entered, we hit our 10% almost immediately, and you can continue to study this pattern over and over and over again. MJ was actually the pick we took this week. And normally 99% of these are individual stocks, not ETFs. But one thing I would like to add is I try to focus on what I think is going to be a fast-moving stock or ETF, which is why I went with this ETF, because the cannabis ETF looked like it was popping. But you had a reversing candle, above average volume, bought at the open on Monday, hit 10% price target, actually the very next day. So we bought at the open on Monday. This was this week. By Tuesday, we were out. Most times they're not out that quickly, but I try to pick the faster movers for a couple reasons. The main reason being it's going to hit your price target or your stop loss much more quicker than if you get a slow moving stock. And if you buy a weekly reversal pattern in a slow moving stock, you are going to find yourself just subject to really more market fluctuations, where the kind of fast moving stocks I like to trade, they can really buck the trend a little bit. So this was our most, and obviously it sold too soon. It was up 18% for the week, but hey, you don't know that. I mean, this is hindsight, so this would be something that I might learn a little bit from. But you can go and look at all the trades, click on the charts. They're there for you. So I hope that you have learned quite a bit on this. I promised you that I would show you a strategy that you can do by yourself. No extra tools, nothing extra, just a good old-fashioned eye test, going through some volume scans, which is what I like to do. I like to go through the up on volume scans every weekend, and then by Monday I have trades ready to go. And then I don't have to do anything. if you do want some help and you want to come work with me, here's what I have for you. I have the weekly reversal signals. I usually will spoon feed about 1 to 2 per week, delivered straight to you before the market opens on Monday. So typically I'm Central Time, so I'll send the signal about 30 minutes before the market opens. You can look at it. If it's something you like, you can take action on it. That is a once a week signal. The Wealthy Trader course, I've talked to so many traders, and being a former financial advisor and believing in plans, I don't believe too many people have a written trader's plan, a written set of rules that's going to help you make money, but just as importantly, help keep you from losing money. So this Wealthy Trader course is an 18-lesson video course designed to create a written trader's plan. I give you a template to start with, and you can edit as you're going through the course, so you have something written in stone. One of my newer courses is the 5 Cornerstones, and I've gotten a lot of positive feedback about this. This is where I go in depth into the bracket strategy and how to identify bull markets and really some of my favorite, most powerful growth stock trading setups. So this is included. Now, bonus number 2, I really wanted to make this a no-brainer because I told you I like fast-moving stocks. I have a swing trader alert service too. So on top of the weekly reversal picks, I'm going to add my swing trader alerts as well. So typically what we do, and it's a slightly different style. So this is an actual trade that we took. This is YinTech, YIN I think is the ticker. It broke out. We bought, sold half into strength, and then sold the rest when it started to look weak. So I think we netted like 30 or 40% on this trade. But and our average win on the swing trades I think is about 9-10%. So they didn't all end up like this, but this is the kind of things we do, whereas the weekly reversal, it's buy, sell all. We tend to scale out to give it a little bit more room to run. I get asked all the time because the weekly reversal picks are really good for retirement income. A lot of positive feedback on that, but to say, hey, you have these 2 services, how can they complement each other? Well, this is just kind of a simple pie chart to show you what is possible. If you really like these weekly reversal picks, you can have a majority of them, have 3 or 4 at a time, and then you can use the swing trade alerts to add a little bit more extra alpha to your portfolio. So out of the last 88 trades with the swing trader performance, 56 have been winners, or 64% win ratio. Now these are typically shorter, average 2 days to 2 weeks, about 1 trade per week, but the win to loss ratio is awesome because you're winning more than twice, about 2.5 times of your average loss. So your average win has been 9.4%, and your average loss is 4.1%. So you're winning almost 2 out of 3, and your win has been more than double your average loss. I'm pretty sure you can make some money with that. We've done actually very well this year, even in a choppy year. So here's what you're going to get, just to kind of recap. If you want to come work with me, the weekly reversal signals valued at $597. The Wealthy Trader course, that's valued at $297. The 5 Cornerstones course, a $197 value, and the swing trader alerts as well to help complement the weekly reversal signals. There's a $267 value, total value of $1,358. Now, this is one strategy, and I always ask people that are just going through so many different strategies, and I'm sure you've heard, jack of all trades, master of none, but what is one good strategy worth to you? Just one, not 5, 10, just one, because I know what one good strategy is worth to me. It allows me to get rid of all the other noise and become master of one. So what I'm offering you is for everything that was just included for $267, just $267. You get all the courses. You get, and this is an annual subscription, so you get the 1 year's worth of weekly reversal signals and swing trade signals. $267, that's an annual subscription. Cancel anytime. So recap, you get the weekly reversal signals, a $597 value, the Wealthy Trader course, the 5 Cornerstones course, the swing trader picks for a total value of $1,358, total investment of $267 per year. Again, cancel anytime. If it's not for you, that's great, but I have a very, very good amount of people that come in, they love it, they stay around, and so you can just go to this right here, HTTPS. This is the secure order form. the TradersPlan.com, Trade-Thirsty. Now let me see if I can get to some of these. All right, do you use weekly reversal patterns for shorting as well as you do long trades? No, I don't. I've looked at it, and I have actually a short setup that I'm testing right now. But I've just found, it's funny, I got asked that last time, I've just found that shorting is harder to do. Best value you're going to find anywhere, believe me. Hey, I appreciate that. Thank you to whoever that said that. Is the refund prorated? No, it's a 30-day money-back guarantee. So you have 30 days to check it out. You can go through all these courses. If you want to stick around, great. If not, then after 30 days, yes. So after 30 days, the refund period would expire. Trying to see if there are any other questions. I believe I believe that is all the questions I have asked. Are there any other questions right now? I'm kind of struggling with this question field, so I just want to make sure that I'm using this correctly.
You need me to help you with the questions, Stephen?
What's that?
You need me to help you with the questions?
Yeah, the box is just so tiny. Have you traded options with this approach, Bill? Me personally, no. I have been partnering up with another options trader, and we will in the coming months launch a complement option strategy, because I probably get asked that more than anything, like, do you trade options? So we are in the process of creating an option signals to go along with it, because I know a lot of our clients who are retirement income seekers, they do like the options angle, but not at the moment, no. Which EMA is used on volume? The 20-day EMA, or you can just use the 20 EMA since it's a weekly chart. Okay, I'm at full refund within 30 days. Yes, that is correct. The courses are pre-recorded, yes. So you can go in there and watch them at your convenience. There's 18 videos in the weekly reversal course. I think in the 5 cornerstones there's about 11. And one thing I did not even mention is I just added a new deep dive weekly reversal course, in addition, kind of a deep dive of what we're talking about. Nothing extra you really need, just some other things to consider to help you put your plan in place, because I couldn't get this all in an hour. That's included as well. What are your weekly moving average? I just use the 10 and the 40-week moving average. Will the recording be available? This recording will be available if they hit the record button. Thanks. What if I only want the swing traders pick? Do I get a discount on that? No, because if you only want the swing traders pick, no, they kind of run together. Plus, if you only want the swing traders alerts, you won't get access to all the courses as well. As how my system is set up. So what I'd recommend is going through. We actually took profits on 3 swing trades this week alone. Actually, 2 swing trades and 1 the MJ. Do we get an email? I just bought it now. Yes, you should get an email. I will go in and check that. I see it come through. Thank you for that. I will go in and check all emails momentarily as soon as this presentation is over. Has to close above the previous week's close. Yes. Has to close above the previous week's close. Not the previous week's open, the previous week's close. How many hours of trading so I can plan ahead? How many hours of training? Well, I mean, you could watch this, and honestly, this would be a lot. Like I said, the weekly reversal course is the weekly reversal course I just created is about an hour. It's about an additional hour, just kind of a deep dive. Now, the 2 other courses you don't need for this strategy, but they really teach you other growth stock strategies as well. So, maybe an extra 2 to 3 hours over there. But as far as once you get this identified, once you get this down, you can take my weekly reversal course, which is about an hour long. I guarantee you can do this in probably 10 minutes a weekend, and then you'd have your trades ready to go by Monday morning. You have a game plan. Okay, so do you take that signal if it was influenced by earnings or other news? Absolutely. Actually, I take most of the signals I take are earnings pops. So, the kinds of scans I go through are volume scans, earnings scans, because a lot of times earnings is what is going to really kind of be a catalyst for the reversal. After 1 year, how much? Same subscription, $267. So it's just it'll auto renew unless you don't want it to. Please show MJ wouldn't have kept you. Please show MJ chart long wick wouldn't have kept you from that. Let me pull this over here for a second. So this is the MJ chart. No, that's actually not a long wick. This one obviously is, but if I look at the MJ chart, we only had to risk, this is about a 9% wick, so we were only risking 9 to 10% to make 10%. Now, I know that's not a great risk reward, but when you can win, some of them aren't all that long, but the long wicks I like to avoid are really ones that are 12, 13% or greater. So I like to keep it 11 or under, but if I really like the stock, I might just turn it into a swing trade. So that, no, we played this nice. Yes, 90% of these signals, and 90% of my signals, whether it's swing trades or ETFs, are growth stocks. They're individual growth stocks. Where do you find the fundamental figures? So if you look right here, I have MarketSmith, which is pretty expensive. There are some other tools. Depending on your broker might be able to show you where to find them. I believe I can get them on, I use Schwab, so I can just go onto their trading platform and find them there. I was at FinBiz. They have good fundamental research. So you might have to, I use MarketSmith because it easily does this for me, but you can really get them anywhere. I know Yahoo Finance will give you the earnings projections and the return on equity. What is your strategy for when the market starts to correct or worse, goes into a bear market? Yeah, so there is some subjectivity along with this. A lot of times I found if you followed me along with all the lists, I'll go on a massive run and then I'll lose a few. Usually when I lose those few, after going on like a 9 or 10 win streak, you lose like 2 or 3 in a row. That is typically at the top of a rally, and I find that when you get towards the top of a rally, you start to find that the choppiness happens, and you're more likely to get stopped out on those. If the market's in a bear market, yeah, I might just sit to the sideline for a little bit. I have the type of mentality is your money is my money and vice versa, and with my train of thinking, and I don't want to put if I'm not comfortable putting my money to work in the market environment, I might hold off on some signals for a couple weeks. So I do take the overall market into account, and if I don't think it's a favorable environment, or it's all about risk reward. If the risk reward isn't there, I'll step aside, because a lot of your money is going to be made in a few months out of the year, so you want to make sure that you don't give it all back. Next question. You use stock charts? I don't use stock charts. Any broker you have is going to have earnings gap up scan. I use MarketSmith, but that's pretty expensive, so you don't need that. Any broker you have is going to have an earnings gap up or a volume scan. That's where I would go. I don't go to stock charts because they're technical. They typically, at least that I know, don't have scan. Right now, I'm kind of doing this all by myself, but I'm in the process of creating a code, so these can be delivered to me with ease. When do you send an email with a signal? Does it get me enough time to study the stock? Yeah, so I'll typically send it before the market opens, maybe an hour or 30 minutes before the market opens. Keep in mind that you're going to get, and I don't even know if I kind of went through that. Oh yeah, I did forget one. Text alerts for the first 15 orders. I am giving text alerts. I can only give it to 15 for the simple fact that it does cost me more money. So if you do want to go ahead and order text alerts for the first 15, that way you don't have to check your email. You got your cell phone with you, which most people do. You can look at it. You can pull it up, look at the stock, and see if it makes sense for you. So I think that's enough time. What's your email? Steven@thetradersplan.com. Just STEVEN at thetradersplan.com. 267 for both the weekly reversal and the swing trader alerts. Yes, correct. 267 for everything. You get both swing trader, both weekly reversal, and 3 courses. Full access to my members area. Yes, and the swing traders and the weekly reversals are different. The weekly reversal is just a simple pattern. The swing trade alerts are more growth stocks that I feel are poised to pop and make a big run. So they are 2 different strategies. Can you show us the email you send for a trade to see what is all included? That might take a little bit of time. If you email me, I can send you my email that went out on Monday. Going in at open on Monday seems kind of loose. Why not go in above the previous week's high? Well, because sometimes you can get a better price. Yeah, I get it, to make sure it's going the right way, but you're going to have to pay more for that. I try to keep these rules simple, and believe me, there are different versions I'm going to test. But I found a lot of times, like if it's strong going into the close on Friday, sometimes you can get a better price coming in on Monday. Because it's a weekly chart, I don't want to over-focus on, bidding for $1. Your signals... Okay. Your signals have enter and profit exit. Yes. So in the members area, I send it out. I send it out before the market's open, and then once I have the market open price, I put it in the members area, so you can immediately, once you get that open price, you can create your bracket, and all that is in the members area. When will John Thomas start? Okay. I want text alerts. Okay, gotcha. Signals out only in the morning. For the weekly reversals, they will be out in the morning. Swing trades are throughout the day. Unless we hit, well, obviously the exit will be. Okay, thank you. Okay, I am at an hour. And if you have any more questions, you can obviously email me at steven@thetradersplan.com. https:/thetradersplan.com. It's a secure order form, /trade-thirsty. For $267, you get everything included. I look forward to working with you again. The first 15 are going to get text alerts. Everybody is going to get everything else. So if you don't have any questions, I really, really appreciate, guys, you listen to me. I hope at the very least, whether you decide not to take action now, I hope that you take this one strategy and run with it a little bit. It is very profitable. I think I'm good to go.